What's going on, boys? Charney here with another video. And now today we have a trade on crude oil. So we have a trade on oil with my entry model. So again, people that don't know, the entry model is very simple, right? Find trending markets, and all you want to see is it's just supply and demand, except with liquidity sweeps in front of them, right? So it's a very vague entry model. Okay, this is a very basic thing that happens all the time on a lot of these pairs. Quite consistently, right? So if you're not able to filter which types of trades of these to take and which ones not to take, then it'll be unprofitable, just like any other strategy. This is the only strategy that's taught as an entry model with no market context. So that is what I do. Is I just pair it with simple market context, and that's how I've found a lot more consistency in my trading. So this is the entry model. It's just trending markets. You want to find a nice liquidity sweep, tap into a demand zone, and you want to see a nice reaction from that. Candle can't close inside, this and that, all of that stuff. And yeah, we just ride the trend. So right here on oil, you have this exact type of setup, right? You have price with lots and lots of liquidity. Okay, the liquidity is great. Not complaining about the liquidity. Absolutely amazing liquidity. And we come down and take that liquidity and give a nice entry candle. So from there, we tap into this demand, give an entry candle. Your entry would be right there. We put stop loss, right under this wick. So it's a pretty big entry stop loss size. So just to catch a 1 to 3, you have to aim, the whole way up, above all of these imbalances here. So what's the theory behind this trade? Did I take this trade? No, I did not take this trade. I'm going to openly call this trade losing, just like I've been doing with all of these setups this week. We've had 3 or 4 that majority of people are taking these, but they don't really understand market context, and all these students are taking these and they're just losing when these trades can openly be skipped just with pure market context. It's not, it doesn't take a rocket scientist, or it doesn't take a lot of crazy skill set to understand these things. They're just getting taught at a poor level. So I'm continuously making these videos to try to help you guys, because I used to trade in the LSD space as well. And it sucks. You'll run loops for a while and you never find consistency. So that's the trade, right? So what I think this is going to lose, well, first of all, let's go to the hourly time. First of all, actually, it's oil. So any second during the day, a tweet can come through. Any second of the day, a tweet can come through that is going to move this. Okay, it depends on what Iran says next, what US says next, this and that. That's all what is moved from a speculation. If some tweet comes out that we're going to bomb Iran, or we're not going to bomb Iran, or they're going to let oil start flowing through, all of this stuff, it happens all day, every single day. That's what oil charts right now currently are moved from. It's a great pair to trade normally, but you can't trade it right now. You quite literally can't trade it right now because half of the moves are complete random. So you could be taking the best of the best quality setups and they could lose from random news, or you could be taking the worst quality setups and they could be winning from random news. So when this situation passes, you think that your strategy is profitable and you think that you have it all down, when realistically you was just winning purely off of news. And a lot of people don't even understand that. They don't even know that. So that's the first thing. Second, oil, we zoom out. Oil, most recent price action has just purely been bearish price action, right? We were just putting in higher lows and lower highs. Very basic stuff here. So if we take that into consideration, right, we've continuously just been putting in lower lows and lower highs. What did price do right here? Well, price ran really inefficiently, right? Price left imbalances within the market that naturally we retrace and go and fill. So what do we have right here? Nice 15-minute fair value gap. Did that get mitigated? Yes, it did. So from there, price coming up and mitigating that 15-minute fair value gap and filling that imbalance and filling the majority of all of this imbalance here to the left and tapping into that 15-minute fair value gap and respecting that, that is a sign for me of, okay, well, price is bearish. We retraced, right? And where can we retrace to? Well, you can retrace to any level. The main thing is to fill in these imbalances on the way down, right? That's the main whole majority of. If you go to the hourly time frame, you can see all of this. This is just a massive imbalance, right? And price slowly comes up and fills in that imbalance, right? So it fills in imbalanced price. That's the whole thing behind fair value gaps. You know, that it's just price filling in imbalances within the market. So price fills that in, and from there, why would you be longing realistically? So I always say, what's the theory behind your trades? Well, what would be the theory behind this trade? Why would you be longing here? What would you be betting on price doing? Well, a lot of people in the LSD space, I'm telling you guys are trapped of you're zoomed in on the 5 minute time frame, and this is what you see: liquidity, demand. Oh, it took liquidity, so now it should go up the TP for some reason. It should just go up there. That's literally what people think. And what happens is that's not the truth. It doesn't have a reason to push the whole way up there, right? Sure, you're gonna get reactions. I say this every single time. You're gonna get reactions, right? You're gonna get reactions. You can come and fill this imbalance. You can maybe come up to this order block. You're gonna get a reaction, but in the grand scheme of things, price is going to end up reversing unless you have a great quality setup where there's actual reasons for price to chase that. And as of recently, we haven't had that, but people can't sit on their hands. That's the biggest thing. People can't sit on their hands, so they're constantly forcing setups. So from here, you would be betting on price realistically to go completely against the trend, throw the trend completely out the window. You're longing kind of in most of the time a bearish environment here. You're kind of longing in a bearish trend here. So what you have essentially right here is, again, your retracement. Longing in this retracement can be fine when you have a very specific level in a very specific area where you think price might chase towards. And say you have a long right here and you're thinking that price might chase up to that level. That's fine, right? But you have to understand your market context. The problem is price will chase up, complete its thing that it's most likely driven to do when we are in bearish environments, whether that's take a level of liquidity, fill in imbalances, all that stuff. After it retraces and does its job, then and only then people are longing after that, and it reverses and they wonder why it loses. The same thing happened on GN, the same thing happened on GS. I made videos on both of them explaining them. So that's the problem, is people don't use any market context. So first of all, understand that this trade, I can get a tweet that can absolutely pump this. I can get a tweet that can absolutely dump this, right? But those two things I can't control. And that's why I don't trade it, because I'm not a gambler, okay? I like my probabilities in my favor, so I'm not trading this. But some people don't understand that, so they are. So that's the main reason I'm not trading it. But if we just take technicals into consideration, the main thing is it's just a bearish trend. It's just a bearish trend, whereas you have imbalances. Price already retraced, filled your imbalances, right? And then from here, we follow out with the trend. We've already completed, this retracement has already completed what it needed to do, which was fill in this imbalance. And that's where you can get into technicals of, okay, well, can we come back up and maybe tap this imbalance again? We can, bro. Like, we can do that stuff, right? We can come up a little bit, we can dump. We can come up, tap this imbalance again, we can dump. We can do all of these things, right? But it's just like none of the odds are realistically in your favor at all, by any means. If you showed this to any normal person saying, yeah, you're in a bearish trend, we already had a retracement respecting 15-minute fair value gap, right? Price is struggling here, respected this 15-minute fair value gap a lot, nice bearish market structure coming in here. This looks a great short, but people are longing here. Why are you longing? It's because you lack narrative and you lack market context. God is literally sitting there showing you examples over and over and over again, and it's like, when is this kid going to learn? That was me, bro. That was me taking so many L's. And you realize there's nothing wrong with the entry model. The entry model is fine. The entry model is profitable. But you have to pair the entry model with market context. If you don't, you're just asking for unprofitability. And you're just asking to run in loops over and over and over and over again. This is the only entry model that does not use market context. I'll say it over and over again. This is the only entry model that does not use market context. I have learned from multiple people. I have joined multiple communities. I have studied multiple different strategies and stuff like that. And that is what I realized. LSD is the only trading strategy out there where it is openly so vague and people wonder why it's not consistent. It's because if on any single pair, anytime you see this, anytime you see this, super liquidity and a valid reaction, and just take the trade, and that was profitable long term, just doing that, anytime you've seen that, everyone would be a millionaire. Everyone would be making money. Do you guys see anyone doing that? Or at least finding any consistency month over month over month over month over month? No, you don't. You literally, genuinely don't. So if you don't see that, then what makes you think that, it's just randomly going to happen to you when you're doing the same thing as 99% of people around you, which is doing this stupid stuff? So please understand, please take it from me. I know I'm kind of giving you guys a lecture when it's literally just a trade breakdown here, but take it from me, you have to use market context. What I'm showing you right now is genuinely the most basic flat out thing, and people watch this video and be like, that's whatever, I'll just keep trading the entry model and just go back to running loops. Waste time then. I don't know what to tell you, bro. I don't know what to tell you. This is the most basic thing. There is trades that you can actually go really, really, really in depth with and really, really break down and pair that with discretion and intuition, bro. And you can genuinely skip textbook trades, or you can have simple trades where it's literally just bearish market structure. You had a retracement and you're respecting an imbalance, right? This looks more bearish than bullish. Your theory for longing here doesn't quite make sense. You're betting on price to make another internal extension when we're already in a bearish trend and we already had, a 50% move throughout this leg. That's risky. And on top of that, we filled in everything we needed to. All these imbalances, they got mitigated. Everything's tapped, bro. So this movement up has mostly all been done. It's all been done. So you're longing for what? Tell me what you're longing for. Comment it. There's no reason to be long. You're longing because we took liquidity on the 5-minute. That means nothing. It genuinely means nothing at all. And not a lot of you guys understand that. So yeah, it's pretty much this breakdown of just how simple it really can be. Again, today I skipped another trade on GBP NZD as well. That one was purely off discretion. And understanding that, it was a 30-minute trade. I'd have to hold it over the weekend. I'm not doing that. And there was something about the trade I didn't like, and I couldn't put my finger on it. The way it was just reacting off that zone, and I ended up skipping that one as well, and that one did lose as well. And that was a bit of discretion. But when it comes to this, guys, this is just basic market structure. This is quite literally, you can sit here and skip these trades, but you guys choose not to. I don't know what to tell you. I'm openly trying to help you as much as I can, but if you guys don't take my advice, then I can't help you. I will continue to make these videos and show to you that you just need market context. Is it dry right now? Yes, it's dry, bro. Yes, it's dry, but would you rather have a dry period or a period of just taking constant L's? That's up to you guys. But yeah, I'll update you guys as soon as this trade plays out. Again, this one's just kind of very basic, very vague. There's not too much crazy, stuff that goes into it. It's just bearish market structure. We completed a big retracement. We filled in imbalances, bro. And from here, there's really, what are you longing into? What are you betting on price going towards? Like, why are you longing here? Is the trend bullish? It's fine if the trend's bullish, but I don't see a bullish trend. I don't know about you guys, but I don't see a bullish trend. And it's not like we have major liquidity to come down here and take either. That's what I'm saying. This trade is very vague. There's not like, we're gonna come down here chase this liquidity, or we're gonna come down here because there's an imbalance, this and that, all this stuff. No, it's genuinely because it's just a bearish trend, and there's an imbalance. So we completed this move already. It doesn't get more simple than that. So I'll update you guys as soon as this trade plays out, and yeah, I'll see you guys then. Yo, it's good. We're back. Took like 5 minutes to play out. I think I ended the camera on that candle, and the next candle got stopped out, and then I was out doing stuff. So I'm back now, and like I don't even gotta say anything anymore, boys. I'm not even gonna say anything anymore. But another loss skipped. So again, let me explain. You have your entry model and you need market context with it. This trade, this week, I've skipped 3 losses. I haven't taken a trade like at all. It's been slow. Last trade I've taken was GBP JPY on the 30-minute time frame. And I will show you guys this. It was a while ago. This was the last trade I've taken. April 22nd, and it is May 22nd. I've not taken a trade. Does it suck? Is it hard? Yes, it's hard, right? That's something not a lot of people will tell you is it's hard sitting on your hands, right? It's really hard sitting on your hands when you're trying to force stuff, but people need to understand we're in an area of trading has not been like this since COVID. I haven't traded COVID, so I can't tell you that, but I can tell you from people with experience that I have watched and learned from. People that back and traded in COVID, those are the people that's actually saying that this is the closest they've experienced to COVID, whereas it was hard. It was genuinely hard. It was dry. Nothing was really, you didn't know where realistically the market was going, and it was kind of moved off the next headline. And that's kind of what we're dealing with right now. So it's no surprise that it's slow. A lot of you guys don't understand the severity of the situation we're in. And with that being said, since you guys don't understand that, you're taking a lot of trades. You're genuinely taking a lot of trades because you don't understand the situation we're in. It's gonna be slow right now. You guys need to understand that. I said this actually in my Discord. I've said that you have an area where, again, we're in a war and it's based off of this next conflict, okay? Last month and the last 2 months have been really, really rough, but we've been managing. We've been able to make it through, right? I've ended both of those months major in profit, and this is the month that I haven't taken anything, and I've skipped just all of these L's. It's been dry in general, but anytime, boom, a textbook setup pops up, analyze it, use market context, skip, and it's an L. And I've been doing that consistently this month, and there's not much to trade. People have to understand that, again, NASDAQ, okay, is, first of all, we're pumping purely because of AI tech. When we are pumping with quite literally no structure to the left, just buys every single day, which is what it was at the beginning of May, every single day, you can't catch a trade there. There's just nothing to catch, okay? Gold, it's straight consolidation because why? Well, gold is a risk-off asset. So when NASDAQ is pumping, doesn't necessarily mean gold is pumping with it, right? But it's also not dumping because it's also a safe haven asset. And there's a lot of conflict about, are we going to go back into this Iran war? Are we not? Gold has been just sideways. It's really been no trend. So that's rough to trade. Oil, people who's trading oil right now have no, I will say this right now. If you're trading oil consecutively right now, you just lack knowledge in the market. You lack expertise, I would say. You lack professionalism. Are you really going to trade an asset that's the most moved right now off of any single tweet that comes through? Any single tweet. They come through all of the time. At least every day, there's at least 3 to 4 tweets that's affecting oil, I would say. That is causing spikes in oil. Do you want to gamble? Because if you do, go to the casino. You probably have a better chance there, and you're going to have a lot more fun going there than sitting here blowing money on evals and getting a drawdown on your account. You got to realize, so that puts NASDAQ kind of hard to trade. Gold, very hard to trade. Oil, untradeable. I don't trade it, right? I don't even trade it, and I just pulled this up because I saw everyone trading this entry model taking it, okay? So I called that one losing. I don't even trade oil right now. JPY pairs absolutely goated. What's going on with them? We have had so much stuff with the JPY intervention and so much stuff with JPY as a currency in a whole that, here, let me just pull it up on the 30-minute time frame. I'm talking mostly about the 5-minute time frame, but as of right now, you can't complain too much It's just consolidating. I guess it doesn't look as bad on the higher time frames, but we've had this since April. We've had this for months on end. First of all, you have this major drop, and then you have all of these wicks, and this is just purely from this intervention stuff. Look at this massive wick, massive wick, massive wick, massive wick, massive wick, and it's every single day. It's just wicks, wicks, and all throughout here. Let me turn this off. All throughout here, it's just wicks, wicks, wicks. It's massive movements like this until this stuff is over. So when you're trading, when you're going on a 5-minute time frame and you're trading all these pairs, that just makes them all do the exact same thing. Like, you can't trade this stuff. Like, look at there's no trading here. You can't do this. It's been sideways since April 30th. You can't do anything here. You genuinely can't do anything here. And it's going to be the same way for all these JPY pairs. You look at this sideways. It's just straight sideways movement with all of these wicks. When these news and stuff is coming out, like, you genuinely can't do anything, is what I'm saying. And people don't understand what type of market we're in. It's going to be slow right now. We have not experienced something like this since COVID, and at least COVID, we didn't have JPY interventions, right? You didn't have oil, which is the main movement of this whole entire thing. All right, sorry boys, I was getting a phone call. But anyways, oil, you didn't have oil like moving the way it is, okay? Oil was actually tradable. It's not tradable right now. So many things are stacked against you, and you guys don't even see it, and you're just hammering the entry model anytime it pops up. It's supposed to be slow right now. It is supposed to be slow. So, again, understand that, first of all. And let's go over this oil trade again. I know it went off topic, but I'm just trying to help you get. No one understands, bro. No one understands the severity of kind of what we're in right now. It's not normal. It's not normal for it to be this slow, but would you rather sit on your hands and openly skip all of these losses? Or would you rather just keep taking them and thinking you're in normal market conditions and keep getting cooked over and over and over again? It's up to you guys. So I explained mostly everything. I'm going to make another video on GC because I called GC losing as well this week. And I only do these videos on trades that I'm actually confident in losing in. Okay, I'm not going to be making these videos. Actually, wait. It should be this one, I think. Yeah, I'm not going to be making these videos on trades that's like, there's stuff going forward, there's stuff going against it. I'm going to be skipping kind of just due to my intuition. I'm just not liking it too much. Those videos I'm not really making videos on. Those setups I'm not really making videos on. I'm only making videos on setups that can just openly be skipped, and I am nonstop feeding it to you guys that, hey, you can skip this. You don't have to take 3 L's this week like you guys did trading LSD. You can just skip it. I literally teach you how to skip it. For $99, you can learn market context that I teach, or you can keep spending about $300 to $400 on a prop firm and keep losing, but people won't spend $99 to learn how to not lose it. Blows my mind. But let's go over this trade. So I explained everything really earlier. Is bearish market structure, right? Most recently, it's bearish market structure. Consistently lower lows and lower highs, right? Oil is only going to get so cheap, though, because of the whole Iran war right now. It's not like, we're just bearish, so now we're just going to dump, all to these crazy low prices. Price falling that hard is going to be dependent on this Iran stuff, right? That still allows, for the 5-minute trend, or the lower time frame trend, to still play out. But I'm saying in the grand scheme of things, it's not going to keep falling forever just because of the straight is still closed and stuff like that, right? So it's not just going to keep falling forever unless they open up the straight and oil starts, flowing in. Then it's actually really going to fall. But you have to understand this isn't going to fall forever, so you do have to understand that. But that doesn't mean you should just long here at a random position just because it's not going to fall forever. That makes no sense. So prices consecutively making lower lows and lower highs. I've showed you guys this, right? And it's just pure basic market structure. Price comes down, makes another low, right? And we retrace. What's the main reason of this retracement? To fill in imbalances. Price ran inefficiently. That might be something you guys need to study. price moved inefficiently, which left imbalances within the market, right? So price will naturally come back and fill in those imbalances of the market. When it does that, from there, we have completed every single move. We have completed all of these moves. This whole reason for this retracement of this leg, right? It's basic market structure, lower low, lower high. Okay, where are we going to react from to the left? Well, we filled in really everything. The main thing was all of these imbalances. We filled them in. We've tapped the highest imbalance. 15-minute fair value gap is mitigated. We have tapped it, rejected it really nicely. And from here, there's really no reason to long, right? I'm going to let bearish order flow fall into place. And even if it falls down here and then we get a market structure shift and we start trending bullish, then that's fine with me. That still gives me no excuse to take a long here, right? I'm not saying, a lot of you guys don't realize that I'm not saying price has to reject this and come down here and just keep making bearish order flow. That's not what that means at all. But it means, first of all, everything's stacked against you. The theory is bearish order flow. Do I know if we're going to come down here and start pumping? Do I know if we're just going to get wicked out and start pumping? Do I know any of these things? No, right? That's the whole point. But you're longing in a position of bearish market structure, right? You're betting on price to just pretty much delete everything it's showing you. It's openly showing you its hands. It's literally showing you, it's feeding you the direction of the trend. It's literally showing you, hey, I'm bearish right now. Here, look at the higher time frame. Here, I'm giving it to you. And you guys are like, nope, staring at the 5-minute entry model, but boom, take the trade and it loses. And then you guys complain. I don't know what to tell you. I don't know. But if you cut all this out, you're just betting on, again, longing here and just disregarding everything it's showing you to the left and just longing here for no reason. There's no reason to realistically long here. So again, retracement, and it's just bearish order flow to continue down bearish at basic market structure. And again, the entry model is completely different than market context. They're completely different. You have the entry model, make sure that entry model is A++, great entry model, there's nothing wrong with it. Only then do you pair it with market context. Okay? And what do we have here? Absolute banger entry model. Great entry model. Looks absolutely amazing. Okay? Looks great. Now I add my market context. Oh, well, it's just showing me it's bearish. Yeah, easy to skip. But no, you guys are sit here and you can't sit on your hands and wait for good conditions to come around. So you're taking these positions. And what happens? You get wicked out. Because there's no reason for price to take liquidity right here really manipulatively and pump to go and chase something. There's no reason. We can easily take liquidity and just chop around here for a little while. Maybe right here we do end up getting a tweet, or we do end up getting buying pressure coming back into oil before the weekend, right? Maybe there's theories that we're gonna sign a deal over the or we're gonna go back into war over the weekend, so oil prices are gonna rise, right? So maybe people's gonna end up buying throughout later in the day, this and that. Anything can happen. That is still no reason to just openly buy here. If you're buying here, it's fine in a trending market, because what's your theory? Well, in a bullish trending market, we're constantly seeking opposite side liquidity. So in a bullish trending market, what's opposite side liquidity? Under here, under here. So we seek that opposite side liquidity. Great. And then we keep following with the trend. As of right here, you're going completely against the trend. You're going completely against the higher time frame trend. We filled in all of this. We filled in all of these imbalances. Price gave a beautiful reaction. We're bearish on the higher time frames. Oil, a tweet can come out at any single time, so you have to be very careful. Everything's pointing towards bearish. And it's just stupid, in my opinion, to take a long position here, because obviously you just get stopped out. So yeah, that's literally it. That's all I can give you guys. So hope you enjoyed that. I'm gonna make a lot more videos. I have a lot more to edit. I'm gonna end up probably making a video on GC as well. I have a video about the illusion of progression, which I think I really want to post it. I think a lot of people is going to resonate with it a lot, but I've been keep pushing it back because I keep getting these trades. I keep scheduling these videos for the same day, or posting these videos the same day. So at some point in time, I'm going to end up posting that. But as of right now, posting this video here as soon as I get it edited. If you guys want to learn market context, I will put the link in my description. If you don't join, bro. I don't care. I'm just trying to help you guys, because I traded LSD with all of you guys, and you'll never find consistency. I can promise you guys. So yeah, no trades for me this week. I know everyone in the LSD space usually, mostly all went negative. These trades can openly all be avoided. There's a difference between having a losing streak and taking, normal losses that are with your edge and within your data, and then taking the wins that's within your data. And then there's losses that can just flat out openly be avoided, and you guys are just stacking losses, and you guys are wondering why you're not going to find profitability. It's right in front of you. These losses can openly be avoided. There is real losses out there that actually have everything against or everything for it, and it looks like a great trade, and they can lose. Right? That's your losses. And then there's trades out there that everything's stacked against you, and you guys still take just and expect it to win. Those are not real losses. You're literally cooking yourself with data. You're not even taking the losses that are expected within this strategy. You're just grabbing random losses, taking trades that literally have everything against it, and you're just taking extra losses that there don't needs to be. These losses do not need to be here. They can completely be gone. They can completely be avoidable with literally the most basic understanding of stuff. Some of these are a little bit more complex, but yeah, hope you guys enjoyed this, and I will see you guys on the next one. Peace.